You have earlier photos also. You can use them. Monetary policy must have variety from time to time. So, monetary policies can never be colorful. They have to be serious. Okay, is it done? Thank you. Thank you very much. हाँ क्या है माइक इज ओके नहीं ये ऑटोमेटिक नहीं है आज ओके ठीक है इज इट ओके नाउ अच्छा ओके बट ये तो मेरा yes Yogesh we can start.
Hello and welcome to the post policy press conference. Today we are joined with in this press conference by Governor Shri Shaktikanta, Deputy Governors Shri M.K. Jain, Dr. Michael D. Patra, Shri T. Ravi Shankar, and Executive Directors Dr. O.P. Mal, Shri Saurav Sinha. We have Shri R. Subramaniam joining us and Dr. Rajiv Ranjan. Along with my colleague from Monetary Policy Department. So we have 21 colleagues from the media today. And before I invite them to ask questions, I would request you to kindly give some opening remarks so that we can start off the press conference.
Thank you. Good afternoon to everyone. Happy to have you here. This time in the statement, there was a particular para 15 where I have tried to summarize what exactly are the key takeaways. But nonetheless, I would like to highlight 6 points as the highlights of today's MPC, today's monetary policy. The first is that India's GDP growth is resilient. It is holding on and it is doing well in a world of slowing growth and possibilities of recession across several countries. That's the first point. Number 2, headline inflation is moderating. And in fact, with regard to inflation, I would like to say that the worst of inflation is behind us. I think this point needs to be taken note of. The worst of inflation is behind us. Globally also, the same trend is visible with the moderation in commodity prices, crude oil prices, and several other prices. Third point, while inflation is moderating and while we recognize and we state that the worst of inflation is behind us, but there is no room for complacency. We have to be extremely watchful and we'll have to be nimble in our actions. We have to watchful and we have to act should it become necessary. So therefore, I said that the battle against inflation is not over because there is no room for complacency. But let me reiterate again, the worst of inflation is behind us. And it is moderating. We have given the inflation path till second quarter of next year. The fourth point I would like to say is with regard to liquidity. We are ready to undertake liquidity operations to inject liquidity, but we will look for durable signs of a turn in the liquidity cycle. Fifth point, the story of Indian rupee is one of resilience and stability. And we remain committed to act to prevent excessive volatility of our exchange rate. And our focus will continue to be on orderly evolution of the exchange rate. The sixth point, the current account deficit is eminently manageable and let there not be any doubt about it. And to amplify further, the foreign exchange reserves have gone up from 524.5 billion in October 21st to 561.2 billion on December 2nd, and that's an increase of 36.7 billion. Also, as I have stated, the external debt ratios of India are, low by international standards. So overall, I would say that the Indian economy is doing. Overall status of the Indian economy is that the Indian economy is resilient, and I think this is India stands out as an island of resilience in an otherwise volatile and gloomy world. Thank you.
Thank you, sir, for those opening remarks. To start the press conference, I'll invite Mr. Anand Adhikari from Business Today to ask his question.
Good afternoon, sir. Sir, I just want to know. I mean, I'm not going to ask you about the RBI's terminal rate in the current monetary tightening cycle, but any estimate of the Fed terminal rate which RBI has? Any estimate there?
You see, the first thing I have to say is that the Fed rate or the terminal rate is important for the whole world, as also India, because it impacts so many aspects, particularly with regard to the currency market. But our policies are primarily governed and determined by our domestic factors, the domestic scenario on growth and inflation. It is not a case that we look at the Fed policy rate and take our decision. We take our decisions on monetary policy rate stance based on our domestic factors.
Okay, thank you.
Thank you, sir. I'll move on to Mr. Govardhan Rangan from Economic Times.
Good afternoon, Governor. So you spoke about that inflation, the worst is behind us. At the same time, that we cannot be complacent about that. And in your speech in the morning, you hinted at that it will be data dependent. So if one puts all these three together, if the data does not deviate from the path that you have projected, will that mean that you are closer to the peak interest rate cycle? Thank you.
You see, we are living in an uncertain world. The outlook is extremely uncertain. So therefore, what we will do if it doesn't match our expectations is something on which it's not possible for me to comment at this stage. And so therefore, all that we are saying is that we will keep on monitoring the overall outlook, and as and when necessary, we will act. And throughout this last almost 3 years now, we have acted, whenever it was necessary, proactively, effectively, in all respects, not just with regard to interest rates. When we reduced the interest rates, we were on the, our effort was to act, our effort was to be as nimble as possible. And now, when we have been increasing the rates, over the last, that is since the month of May, we have been also sort of been guided by the incoming data and the outlook. Now, from that, what conclusion you will draw and what it indicates is something which will be your interpretation. It's not possible for me to say that would it mean this or would it mean that.
Thank you, sir.
I hope I have answered your question, but please, understand that we will go by our domestic factors and we will watch the incoming data. We will also, because it cannot be backward looking, data is always backward looking. We will also keep on assessing the future scenario, the evolving dynamics of inflation and growth, and then act. Would you like to add something? Thank you.
Thank you, sir. I'll move on to Ms. Lata Venkatesh from CNBC TV.
Governor, at 6.25 current repo rate, your forecast 1 year down inflation is 5.2. If you take the average of Q1 and Q2 for next year. So your positive real rate ex ante is 100 basis points, 1%. When you shifted from neutral to accommodation, it was 2%. So
85 basis points, exact arithmetic will be 85 basis. Yeah.
Yes. So when you, do you want that kind of a real rate? What do you have in mind? Since you quoted that past also in the previous policy.
This we have, we have been discussing this at length internally. I would request Deputy Governor Dr. Michael Patra to take this question.
So as you
Put the
heard,
mic on.
it comes on, I think.
No, it's not coming.
Oh.
Yeah.
So as you heard, Governor, the real rate is just 85 bips. But when that is achieved, that will be achieved only in the second quarter. Okay. At that time, what will be the inflation gap? Will inflation be at target? Is the question that we need to ask.
May I add, you have brought this new phrase, core inflation, in your, when you explain your stance, elaborate your stance, saying that the MPC will look at gradual calibrated increases and break the persistence of core inflation. So do you have a trajectory, and do you want that also to come to fore?
No, or core inflation, this is not the first time that we are talking about it. I mean, earlier also we have talked about core inflation, but over the last 6-7 months, I think it has remained sticky around 6%. And that is what I have said. So therefore, this time, all that I have done is that this issue also needs, we have placed it on the table because that also needs to be specifically addressed and kept in mind when we are, decomposing, breaking up our inflation analysis.
धन्यवाद महोदय। अब मैं आमंत्रित करूंगा ब्रजेश कुमार, जी बिजनेस न्यूज।
सर मेरा सवाल केवाईसी को लेकर है कि जैसे अगर कोई कस्टमर को अकाउंट खाता खोलना होता है तो बैंक वाले कहते हैं कि ठीक है हम ऑनलाइन खाता आपका खोल देंगे। तो अगर खाता खोलने के लिए ऑनलाइन या बिना ब्रांच में गए केवाईसी हो सकती है तो फिर वापस री केवाईसी के लिए ब्रांच जाने की शर्त क्यों है? पहला पार्ट। दूसरा पार्ट, क्या एक बैंक में अगर केवाईसी हो गई है तो कोई ऐसी सेंट्रलाइज व्यवस्था हो सकती है क्या कि बार बार अलग अलग बैंकों के लिए अलग अलग केवाईसी ना करनी पड़े? एक। दूसरा ये कि $100 का अजम्पशन जो लिया आपने इन्फ्लेशन के लिए,
ये तीसरा क्वेश्चन है। मैं पहले 2 क्वेश्चन आंसर कर लेता हूँ। देखिए, री केवाईसी आप ऑनलाइन में कर सकते हैं, कोई जरूरी नहीं है कि आप ब्रांच जाए। आई थिंक एग्जीक्यूटिव डायरेक्टर सौरभ सिन्हा, आप थोड़ा एक्सप्लेन कर दीजिए। ब्रांच जाने की जरूरत नहीं है।
थैंक यू गवर्नर। जैसा गवर्नर ने बताया, ब्रांच जाने की जरूरत नहीं है अगर आप अपना री केवाईसी करवा रहे हैं। अगर आपका कोई भी केवाईसी डिटेल उसमें कोई भी बदलाव नहीं आया है तो आप सिंपली एक ईमेल भेज दें या फिर अपना जो रजिस्टर्ड मोबाइल है उससे मैसेज भेज दें बैंक को और री केवाईसी हो जाएगा। यदि सिर्फ एड्रेस का चेंज है, इसी प्रोसेस के द्वारा अपना नया एड्रेस भेज दें बैंक को। उसके बाद जो नया एड्रेस है, बैंक विल वेरीफाई दैट। वो 2 महीने के अंदर में बैंक वेरीफाई कर लेगी आपके नए एड्रेस पे चिट्ठी भेज करके इत्यादि। और जैसा आपने कहा था कि यदि एक बैंक केवाईसी कर चुकी है तो दूसरे बैंक को उसको फिर से नए तरीके से केवाईसी करने की जरूरत है, बिल्कुल नहीं। ये एक CKYCR है, सेंट्रल केवाईसी रजिस्ट्री, जिसमें कि CKYCR आइडेंटिफायर नंबर आपको दिया जाएगा। वो आइडेंटिफायर नंबर अगर आप शेयर कर लेंगे दूसरे बैंक से तो फिर सेकंड बैंक जो है उसको केवाईसी फिर से पुनः करने की जरूरत भी नहीं पड़ेगी।
नहीं, बस सर फीडबैक ये कि प्रैक्टिकली बैंक जो है वापस बुलाते हैं कि आप ब्रांच में आइए, वहीं आपका केवाईसी होगा।
तो उसके लिए फिर हमारा जो ओम्बड्समैन ऑफिस है या अदर तरीके हैं, वो आप पॉसिबली इट मे स्टेम फ्रॉम आई डोंट नो lack of knowledge, lack of awareness, so you can bring that to the notice of the bank and in case यदि परेशानी हो रही है तो फिर हमारा जो लीगल जो नॉन लीगल फास्ट रेजोल्यूशन का जरिया है वो भी अपना सकते हैं।
इसी इसके बारे में कोई डाउट नहीं है। हमारा जो रेगुलेशन से बहुत साफ है, बहुत क्लियर है। ऐसा हो सकता है कि कोई कुछ ब्रांचेस कहीं पे ये हो सकता है, आप जैसे कह रहे हैं कि हो सकता है, तो अवेयरनेस होनी जरूरी है। हम अगर हमारे पास कंप्लेंट्स आते रहते हैं ओम्बुड्समैन में और उसमें ओम्बुड्समैन इंटरवीन करके उसको सॉर्ट आउट करते हैं। लैक ऑफ नॉलेज हो सकता है, इसके लिए मोर अवेयरनेस जरूरी पड़ेगा। हम तो ये जो इंस्ट्रक्शन है उसको बार बार दोहराते हैं बैंकों को कि मतलब इंटरनली हम बैंकों को ये बार बार दोहराते हैं कि इसको आप फॉलो करिए जहां जिस बैंक से ज्यादा कंप्लेंट आता है। थैंक यू।
Thank you, sir. I'll move on to Mr. Manojit Saha from Business Standard.
Good afternoon, sir.
Ah,
Yeah. I have 2 questions, if you kindly allow. Firstly, when do you see core inflation coming down? Because core inflation you have mentioned in the statement today many times, which has kind of markets have reacted to that. The second is some of the MPC members have given their view. I would like to know your view. Do you think MPC should consider exchange rate movement while deciding on the interest rate?
You see, MPC, what the MPC considers and what aspects go into the MPC's discussion, I think you will have to wait for the minutes. They will come up, they will be published exactly 2 weeks from today. So you will have to wait for
I was
that.
generally asking, do you think MPC should consider exchange rate movement while deciding on the interest rate? Is that a consideration?
The consideration is growth and inflation. Let me mention that the consideration is the growth and inflation, and that is what is provided in the law. Monetary policy cannot deal with, that is the interest rates or monetary policy stance is for a different purpose. It's not for exchange rate. It's not for capital flows. It's not for, it's not for exchange rate management. Exchange rate management, our focus is to prevent volatility and to attract capital flows. If that is the objective and that is what you are implying, there are other instruments which have to be used. And we used some of it, we had made some announcements on 6 July of this year. So monetary policy cannot be really monetary policy. The focus has to remain on domestic inflation growth dynamics.
Thank you.
You see, our target is the headline inflation. We analyze the headline inflation, and of course, as a part of that, all aspects of food inflation, the non-food, non-oil inflation trends, the fuel inflation, all these things are analyzed. But separately, we don't give, what will be the number, future number for core, for fuel, for food. So that is a part of the headline, and headline is our target. Our target is defined in terms of CPI headline, and that is why we give that projection. Other projections we do not give.
Thank you, sir. I'll move on to Mr. Shashank Dinmishe from Financial Express.
Hello, sir. Sir, what steps is the RBI taking to resolve the differences between the foreign regulators and on the settlement of trades? And what is the impact on domestic operations of foreign banks in India?
I think Deputy Governor Ravi Shankar will take that question.
I presume you are referring to the ESMA issue that is making the rounds. The discussions are continuing. And we hope to achieve some sort of an understanding by that. There is no disturbance as of now. We will see when it comes to that. We would prepare should there be any possibility of a disturbance. We'll be well prepared to handle those. Thank you.
Thank you, sir. I'll move on to Mr. Ben Jose from PTI.
Sorry. No, the policy document is speaking about the India being a bright spot, and India is decoupled from the rest of the global economy. For MPC, how bright is that spot, and how long we can be bright? We can remain bright, and our decoupling. Many analysts say that we are mostly decoupled. Especially our markets are decoupled from the rest of the world. Where does RBI see that?
You see, the phrase bright spot is not an RBI invention. It is IMF which said that India is a bright spot, and I was basically drawing from what the IMF said. That is with regard to the phrase. But definitely, as I said, that India is, India is an island of stability in a very, very turbulent world. In this statement, if you go through it carefully, I have said at one point that in an interconnected world, we cannot be entirely decoupled from what is happening in the rest of the world. In certain aspects, yes, I mean, India sort of appears to have decoupled. But when the world is so interconnected, we cannot be entirely decoupled. So therefore, it's not a question of a black and white. I mean, there are a lot of interconnectedness between what's happening globally. When we talk of spillovers, the spillovers affect all emerging market economies, including India. So we are not entirely decoupled.
Okay. Thank you, sir. I'll move on to Mr. Anup Roy from Bloomberg.
Thank you, sir. Sir, Finance Minister has said that growth is our top priority now. And as per your assessment, growth is dipping a little bit. And your commentary on inflation, the market interpreted it as pretty hawkish. And they were expecting after, you will give a good signal that there will be pause after this or there will be slowdown. But you said that battle on inflation is not over. So that what kind of impact that will have on growth, and is growth not a top priority for you now?
No, I did not say that. Now, what does the policy say? What does the legal provision say? That price stability is RBI is expected to maintain price stability, keeping in mind the objective of growth. For government, naturally, growth has to be top priority. And in fact, in my statement, in one paragraph, I have said that we have to also focus on growth. And I have referred to, the opportunities for investment coming out of the innovations in new technology. I have talked of climate change opportunities for investment. I have talked about PLI, also being an area which will attract a lot of investment. So I have talked about the investments, that these are the opportunities available for India to attract and to undertake more investments. And why do we check, why inflation management is so important? Inflation management is not important not just for its own sake. Inflation has to be, there is a target, and the aspect of price stability is essential because that is needed for your growth, that is needed for your medium-term growth. If inflation goes very high, investors will stop investing. So therefore, you have to manage inflation. Price stability has to be maintained in the interest of growth.
Right.
So therefore, there is no contradiction between the two.
Sir, one quick question. What would be your expectation from G20 meets? And what would be RBI's, what will RBI try to achieve?
No, we
through this
will,
G20?
we are a part of the finance track of the G20 meetings. As you know, in the G20 meetings, there are several tracks, but broadly there are two tracks. One is the finance ministers and central bank governors track, which is known as the finance track. And then there is the Sherpa track, which which takes into account a lot of the other aspects relating to climate change, aspects relating to health, nutrition, vaccination, so many other aspects. And finally, they all converge in the when the leaders summit takes place and the communique is issued. It's not possible for me to say what will be the outcome at that stage, but I think, as I said in my statement, it's a great opportunity for India to play a bigger role in the international arena. And I think India, there is a lot of expectation from many countries, at least, that they're looking up to India to play a larger role in many aspects, whether it is with regard to the innovations in fintech, in digital payments, or in several other areas. So therefore, this is a big opportunity for India, and we will participate in the discussions in the finance track. The government has already set out the agenda for the finance track separately, so we will be participating in those discussions.
Thank you, sir.
Thank you, sir.
I'll move on to Mr. Mayur Shetty from the Times of India.
Governor, the policy rate is now pretty close to where the inflation is. So do you see the policy rate being a neutral one right now? And also the inflation forecast for next year is within the tolerance band. So if it remains at that within the tolerance band, would you say that the goal has been achieved of the monetary policy?
I think Dr. Patra can take that question.
I think Governor said that the battle against inflation is far from over. So we remain on guard, far from neutral, until we see a durable decline in inflation and it's staying within the tolerance band. But the good thing is what you are pricing in. That is that we have lowered the size of the policy rate change. That is the most important thing. which unfortunately is getting priced in. So that has come after a lot of deliberation. After continuous 50 basis points increase, it has now moderated. So that tells you of a shift in the wind. As Governor pointed out, we feel, and we are open to correction, that the worst of inflation is over. But the moderation of inflation will be very grudging, very uneven. So we must shepherd inflation first firmly into the tolerance band and then to the target.
Thank you, sir. I'll move on to Mr. Shayan Ghosh from the NIM.
So I wanted to understand a bit about the anonymity factor in CBDC. There's been a lot of talk about that. You had mentioned in one of your earlier speeches as well. Also, is an update on what kind of transactions have happened in both the pilots. Could you give some idea on that?
Now, I will address a different question on CBDC because a lot of people have been raising this question. So I will clarify that. And then I will pass on to Deputy Governor Ravi Shankar to specifically address your question. You know, number of people have been asking to RBI, to me, and also questions have been, raised in the newspapers, in the electronic media as to what essentially is the difference between UPI and this CBDC. You see, any UPI transaction involves the intermediation of the bank. So when I use a UPI app, the message goes to my bank account gets debited, money gets transferred to the recipients, to the receiver's bank, his account gets credited, and he gets a message in his mobile phone. So there is an intermediation of the bank in that process. In CBDC, just as paper currency, you go to a bank, let us say you are drawing some 1,000 rupees currency notes. You draw 1,000 rupees, keep it in your purse, you go to a shop, you have to pay 500 rupees, you take out 500 rupees and pay. Here also, you will draw the digital currency and keep it in your wallet, which will be basically your mobile phone. And when you go and make a payment in a shop or to another individual, it will move from your wallet to his wallet. There is no routing or there is no intermediation of the bank. I thought this is necessary to clarify this point because a lot of people having, this whole question as to what is different between UPI and CBDC. With regard to your question, DG Ravi Shankar can answer.
Yeah, I mean, just to expand in a little bit on what the governor said, e-rupee is money, UPI is a payment method. So you can use any payment method to move money. So once that conceptual understanding is clear, I think we will understand the difference. And the key point is that UPI is movement of money from bank account to bank account, as the governor said. This is payment of cash. So it is possible that two private entities can provide wallets and the money can move between that. That's not possible in UPI. UPI has to be necessarily between a bank and another bank. Plus the fact that e-rupee is money, its use cases can be many, many more. Money has various functions. It can do any of those functions. And given that that can be done, it all depends on how much our startup ecosystem or fintech system, innovates on this, what kind of payment, channels it opens up using e-rupee as the base. It's much wider. What actually will happen, we'll have to wait and see. We'll set up the base system, then private sector can innovate. Coming to your question on anonymity, you see, a fundamental feature of currency, cash, is anonymity. One of the reasons it's still being used in many developed countries to a large extent is because people love their privacy, people love their anonymity. So for anonymity purposes, currency can be used. How anonymity is to be ensured in the case of a digital currency, because the normal understanding is anything digital leaves a footprint, can have various solutions. We are looking at largely first technological solution. We understand there are technologies possible to do that. So we can use any one of those. It is also possible to get a legal provision to ensure anonymity. So, what exactly will happen will depend on how things evolve. But anonymity is a basic feature of currency and we'll have to do that. And to that extent, it is again different from UPI. Thank you.
Is there legal cover coming? That is the crux, isn't it? Because the technology cover can always be pierced by better technology.
No, I'll answer that.
Will you look for a legal
No.
cover? Otherwise, why would I use
No,
it?
I will, I'll answer that question. Ravi, you can correct me if I'm wrong. The amendment in the RBI Act with regard to the CBDC says that currency will also include digital currency. That is the amendment which has been brought. So therefore, in all respects, there is no difference in the eyes of law. There is no difference in treatment between paper currency and a digital currency. The income tax department has got certain limits for digital, for cash payments, for cash withdrawal, for cash payments. Beyond a certain payment, beyond a certain limit, you have to give your PAN card number. The same rules will apply in the case of the CBDC also, because both are currency. So that is how.
Fear that the ED will one day come and tell the bank, give me whom it was transferred to.
No, I mean, you see, let's be clear. When you pay in currency notes to another person,
You cannot find out.
sorry?
You cannot find out.
No, here also, incidentally, let me say you cannot find out because the information is not available to the bank, and information is not available to the bank. So therefore, the bank doesn't know. It goes from my mobile to somebody else's mobile. So why should we create this kind of a fear psychosis? There is a law of the land, and these are early days. The pilot on retail has just started. The experience out of the wholesale CBDC, that pilot has been very satisfactory. We have got, it's been very satisfactory outcomes we have noticed. The technology has by and large worked. The processes have by and large worked. Market participants and others are very happy that there is no need for collateral while doing a GSEC transaction. There is no need for a collateral, and it is instant settlement. So the feedback from the first pilot on wholesale CBDC has been very satisfactory. But there are some learnings, and we are working on that. Coming to retail, it has just started from 1st of December. Today, just about 1 week. So as we go, there will be several learnings, and we will try to fine tune. But let there not be any sort of fear psychosis that somebody is going to chase and all. I think that would be unfair to the whole exercise. Thank you.
Thank you, sir. I'll move on to Mr. Ankur Mishra from ET Now.
Sir, you have mentioned that the worst of inflation is behind us, and speaking completely on data, like crude, you have assumed it to be over 100, which is around 80 now. So if worst of inflation is behind us, is the rate hikes which has been done till now, most of it is also behind us?
Sorry, I didn't get that.
Most of the rate hikes are also behind us?
That's for you to assess. I think Dr. Patra can take that question.
As I pointed out, we have moderated the size of the policy rate increase. That is a very fundamental guidance that we are giving to the market.
Right.
That the rates
Switch on the mic. Switch on the mic. Sorry. Any other mic on? Please switch. Please switch off your mic. Yeah.
If things pan out as we have projected, then the rates of 50 basis points consecutive increases are over. But we cannot take our shoe off the brake because inflation is still averaging 5 to 5.4 next year. So we must guide it to a place where it remains stable at those ranges and then move on to 4. Till then, we must be, on our toes. That's the thing.
Another question on the widening gap of credit growth and deposit growth. That is something which has been a concerning factor for banks. Has there been any communication with banks so far? Is there any direction which RBI has given? If you can update on that.
No, RBI doesn't give any direction to the banks with regard to their interest rates on either side, whether credit or on the deposit side. The credit growth and the deposit growth have to be seen in the proper perspective. The credit growth is on a low base. The deposit growth is on a high base. That is why it appears the divergence between the two, they look to be so divergent. During the whole period of pandemic, or even last year, the credit growth there was hardly any credit growth. It was about 5%, 6% or so, low base. But deposit growth had picked up in the first 2 years of the pandemic. So whatever is now happening based on the deposit side, the growth has to be seen in the context of the base effect. Now, banks do their asset liability management, and depending on their funds requirement, depending on their own asset liability management, the ALM, depending on their ALM assessment, they will take necessary action, both on the credit side as well as in the deposit side. We keep meeting the bank. I can understand from where your question comes, because I had a recent meeting with the bank executive. That is nothing to do with the interest rates, because that is deregulated. That meeting is to take stock of the overall banking sector, where it stands, what are the challenges, what are the possible risks. It was broadly an assessment of the overall banking sector and what is the outlook. And we need to hear from the banks also what is their assessment. While we keep on making our assessment, but we would always like to hear what is the assessment of the banks. Is there anything you would like to add?
Thank you, sirs. I'll move to Ms. Chloe Cornish from the Financial Times.
Thank you. With regards to the confusion or the difficulties with ESMA, I was wondering what the remaining points of contention are, and has either side conceded anything at this point?
Which one? I didn't listen. Sorry? Oh, the ESMA. Yes. Yeah, I think you can.
Apart from what I responded to an earlier question, I don't think there is any further details that we need to give. The discussion is going on. You see, the fundamental point of divergence remains the fact that that an Indian entity that does not operate in European Union and operates entirely in India is being subjected to regulation by a European Union regulator. A European Union, because you cited this case, but this holds good for a few others as well. Like Japan, for example, we have an agreement with them. They simply went ahead. They said they made an assessment and, it's good enough. It's equivalent. So similar things can be done. We are working towards that. The details are for the teams to discuss. But once this fundamental point of divergence, we reach some sort of an agreement, I think we will be able to sort out the details.
Fundamental point of divergence remains. They're not accepting your position on this.
Like I said, we are discussing at this point in time. Yeah.
Okay. Now let me just supplement. That is under discussion, and we are quite hopeful that some resolution will be found. But let me also say that I think India is today, it's different from what it was. I don't want to mention when, 10 years ago, 20 years ago, 30 years ago. Our regulations today are very robust. In fact, we are fully compliant with the CPMI, guidelines, so under the aegis of the Basel framework. And we comply with all the CPMI standards. We comply with all international standards. Our market infrastructure is very robust. I think it is also necessary for regulators on the other side to appreciate the credibility. They must trust the credibility and strength of the Indian regulations. That is what we are trying to impress upon them. It is under discussion, and we are hopeful of a resolution.
Thank you, sirs. I'll move to Ms. Swati Bhatt Shete from Reuters.
Thank you so much, sir. So you mentioned about core inflation, remaining sticky. Can you please explain what are the factors which are keeping the core inflation sticky? And is that also suggesting that there is a lot of demand-led inflation that's cropping up? Is that a reason why, we are continuing with rate hikes? And secondly, so just wanted to understand, forward premiums have crashed to decade lows. How long do you see premiums staying there, and how will it impact the spot rupee, sir? Thank you.
You would like to take it?
So just on core, there are many factors that are playing out. One is, for instance, the pass-through of input costs. You saw the corporate results of the second quarter, and you see that expenditure growth has been outpacing revenue growth, mainly because of the pass-through of input costs. There's also this exchange rate pass-through that is going on, so that imported inflation pressures get in. And we are noticing that non-tradables, that is services, where inflation tends to stay and is very stubborn, those prices are now started to rise. Initially, it was the goods part of core which was rising. Now it's services. So these three things warn us that we need to be very, very on our toes about second round effects, because they can generalize, they can spread into other categories. So that's what we're trying. And we're also trying to assure people that we are on the job and we will bring down core, and that is already being visible in the expectation surveys. You'll see when that is released today that there is a perceptible decline in expectations.
Thank you, sir. So we'll take last few questions.
No, spot rate, what will be the spot rate? Obviously, I cannot comment.
But the forward premiums have come, fallen to a decade low. How long will it stay there? And it also complicates exchange rate management for the RBI.
What it is telling us is that there is a cash shortage in the spot market, but that is now getting alleviated, because if you see, the forward premium has started to correct today. So flows are coming back. There was a downward dip in the exchange rate, to which people responded by holding back proceeds coming in. But now there's more. I think it was around the monetary policy announcement, but now the announcement has been made, and governor has given specific assurances on the exchange rate and on the external sector. We see the premiums rising.
Thank you, sir. As I was mentioning, we'll take last few questions. So I'll invite Mr. Vishwanathan Nayak from BQ Prime to ask his question.
Thank you. Thank you, Mr. Dayal. Governor, two questions. Firstly, on one side, you're extending the date for these enhanced HTM limits, letting banks manage their investment portfolios better. But similarly, in your statement, you say that you should wean off liquidity surpluses. This is also a time when credit growth is sort of picking up. It's at decadal highs. I'm trying to understand how do we coincide? How do you make sense of these two statements?
I think ED Saurabh Sinha, you would like to take that question?
Thank you, sir. You see, the two are a bit unrelated. The reason why this extension in date has been provided is to enable banks to better manage their investment portfolios. Because from 1st of April 2023, they were then required to then wind down their positions. So now that date has been extended by 1 more year to enable a smooth process for the banks. That's all.
The other question I had was on CBDC. So since you expanded so much on it, I wanted to bring this up. Currently, no shop owner can refuse if you pay in rupees, in cash, hard cash, right? No shop owner can say, I'm not going to accept that money. Will that be extended to CBDCs? Can a shop owner say, I do not want to accept payments in CBDCs, or will they be legally required to accept that payment if it is given?
No, currently it's only a trial, and it's a closed user group in which a large number of merchants and large number of customers, the trial is restricted to them as a closed user group. Going forward, there will be several challenges. We will deal with all those challenges and all these questions. You have raised a question. So these kind of questions and these kind of issues will come up before us, and as we'll move forward, we will deal with them.
So I'll move on to Hitesh Vyas from the Indian Express.
Hi, sir. Good afternoon. Sir, World Bank recently upgraded India's GDP forecast to 6.9 from 6.5, sir, while RBI has slashed the rate to 6.8 from 7. Just wanted to understand, why is this difference of opinion between the two entities in terms of revision of GDP forecast?
No, it's only a 10 basis points difference, and I don't know on what basis they have arrived at 6.9. I don't have their internal assessment. In our assessment, we have done this slightly mild adjustment mainly because there are certain developments, in the external sector, the exports and all that, taking the latest trends into account. It's a mild adjustment with risks evenly balanced. And there are several possibilities. When we say risks evenly balanced, that means 6.8 can also go up to 6.9 or 7. I mean, the risks are evenly balanced. So I really cannot, but at our current assessment, we have said that it is a 6.8. And with regard to the external sector challenges, one point which I have mentioned in the statement, which I am sure you would have noticed, which is very important, is that while merchandise exports have contracted in the last month, the services exports have really picked up very strongly. I think I have given the number also, some 29.1% growth in services exports. So therefore, that is also happening. So it's a mild adjustment that we have done, 10 basis points here and there. I don't know.
Thank you, sir. And I think the last person I'll invite to ask the question is Pratigya Vajpayee from Informist Media.
Good afternoon, Governor. So if one goes by the bond market reaction, your 35 basis point rate hike, it feels like a 50. So one, I would like to ask that was 50 basis points even a consideration this time? And second, considering that India's growth is resilient and in a weak global environment, this is going to aggravate India's external trade balances. So in this context, is demand curtailment a consideration for RBI?
You see, I explained in my statement that the current account deficit is eminently manageable. The remittances are, the first quarter, the growth was 22.6%. Remittances, the World Bank says we'll get $100 billion, but going by the first quarter number, the World Bank is projecting a 12% growth, but our first quarter growth is 22%. So therefore, the remittances are picking up. Services exports have also fundamentally picked up. There is data to show that the global IT expenditure is also rising. So therefore, it will all depend on how the situation evolves. But what was your fundamental question? I mean,
so for external trade balances, is demand curtailment a consideration?
I mean, you see, we have given the numbers. We have always said that we always keep in mind the objective of growth. Anything that we do, the aspect of growth is also always kept in mind. Is there anything which you would like to supplement?
Are you referring to the slowing down of imports?
I'm talking about the deterioration of net exports.
Yeah. So when monetary policy is withdrawing accommodation, it obviously wants to modulate aggregate demand to align with supply, right? And that affects all categories, including imports. But India's imports have a structural character. There are many parts of imports which are essential by nature, like crude petroleum, for instance. We don't produce that. So there are intermediates and machinery which we have to import just to grow. Also keep in mind the fact that if you want to grow faster than today's rate, you have to run a little higher current account than 21-22. 21-22 is 1%. Now, if you want to step up the growth, you have to run a little higher current account deficit. Okay, so there are aspects of demand which cannot be reduced by monetary policy in respect of imports. But as Governor is pointing out, we are not too worried because we have buffers. And as the growth rate changes, the size of the current account which is viable also changes.
Also, did you consider a 50 basis point this time?
We considered every part of that, 50, 25, not acting at all, acting more than that. And finally, after much deliberation, chose that.
Thank you. I think we should conclude. Yeah, thank you, sir. And with this, we come to the end of the press conference in this calendar year, the last one this year. I would want to thank our top management for being here and patiently answering all your questions. And of course,